Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
On Saturday, a significant geopolitical event unfolded in the Middle East. Israel faced a major surprise attack from Gaza, orchestrated by Palestinian militant groups, including Hamas, the Palestinian Islamic Jihad, and the Popular Front for the Liberation of Palestine, resulting in significant casualties. The US expressed condemnation of the attacks, and reaffirmed its support for Israel, as Tel Aviv declared the state of emergency and war. In the past week, global financial markets experienced notable shifts and developments. One of the key surprises was the release of the non-farm payrolls report on Friday, which revealed robust job growth, surpassing expectations. This positive jobs data, aligned with the Federal Reserve's stance of maintaining elevated interest rates for an extended period, led to significant movements in various markets. Bond prices saw a substantial decline, resulting in record high yields not seen in years. This bond market sell-off was driven by concerns of a potential worldwide economic slowdown, which led to a sharp drop in crude oil prices, marking the steepest one-day decline in a year on Wednesday. Developed equity markets displayed mixed performance, with US indexes ending the week positively. The Nasdaq Composite added 1.6% on the week. In contrast, European and Asian markets witnessed declines, with Europe's Stoxx 600 index falling to a 6-month low. Rising interest rates impacted value stocks, particularly in sectors like utilities, consumer staples, and real estate, which face competition from short-term treasury bills yielding above 5%. The highlight of the economic developments was the unexpected strength in the US labor market. Non-farm payrolls surged by a remarkable 336,000 jobs in September, double the expected figure. This positive report, coupled with upward revisions to job numbers in August and July, confirmed an acceleration in economic activity in the third quarter. The unemployment rate remained stable at 3.8%, while average earnings showed marginal easing. Additionally, the US international trade deficit contracted to its lowest level in nearly 3 years in August, further reflecting the health of the US economy. Federal Reserve officials continued to emphasize a higher-for-longer interest rate narrative through public speeches. As the Fed's next meeting approaches on November 1, futures markets are pricing in a 70% chance of no rate change and a 30% chance of a 25 basis point hike. The upcoming release of inflation data next week will be crucial in anticipating the Fed's next move. Two central banks in advanced economies held monetary policy meetings. The Reserve Bank of Australia decided to keep rates unchanged at 4.1% for the fourth consecutive meeting, signaling a patient approach to further rate hikes. Similarly, New Zealand's Reserve Bank maintained policy rates at 5.25%, as it aims to bring down inflation to its 1 to 3% target range, from the current 6%. Currency markets remained relatively stable, with minor fluctuations in the dollar index. All eyes were on the bond market, where yields reached multi-year highs. In the money markets, 3-month US bills yields increased by 4 basis points to 5.52%, while German bill yields surged by 10 basis points to 3.75%, near a 15-year high. On the longer end, 30-year US yields rose by 23 basis points to 4.94%, while 30-year bonds in Europe closed at 3.11%, reflecting the broader trend of declining bond prices. Commodity markets, including crude oil, faced headwinds, particularly due to concerns about future economic growth. The Bloomberg BCom index recorded its most significant weekly decline in 3 months, down 2.1%. Crude oil markets experienced a sharp downturn, with both Brent and WTI prices falling around 10%. This drop was attributed to fears of a global economic slowdown resulting from higher interest rates. Notable events in corporate news included Alstom, the French maker of high-speed trains, experiencing a 41% weekly drop to a total market cap of €5 billion, its worst performance in 2 decades, after it warned of significant negative free cash flow in the quarters ahead. Media reports also indicated advanced talks between ExxonMobil and Pioneer Natural Resources for a potential $60 billion deal, leading to a 10% jump in Pioneer's shares. Additionally, German sandal leader Birkenstock plans to raise $1.6 billion in its upcoming listing on the NYSE, with a total market value of $10 billion. That's all for this week. Please subscribe to the channel and help us promote it. Visit succinct.info to learn more about our subscription.